Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 196 of the AJ Brown Show. Today is August 8th. I'm Cyprian Francis, and with me, as always, the cool guy of the hour, Mr. AJ Brown. AJ, how you doing today?
I'm good. I'm so cool.
Very cool, very cool, very chill week. I feel like last week's show on Friday, it was a red day. It seemed like there was a lot of fear in the market heading into the weekend. The fear subdued a bit. Monday, we kind of rebounded almost that entire fear, drop down, and then somewhat chopped this week. What's your big takeaway? What are you seeing from the market?
Well, I'm a little bit worried. I want to jump right into the technicals if you don't mind, because you're right. There was very little news this week. I mean, the only thing that kind of got me was on the economic news front with some international trade numbers. But other than that, you can see right here that we've had that pullback last week caused by employment numbers, caused by fear that the economy's not doing as well as we thought they would be doing. But it's slowly marched up. In fact, we got a confirmation signal that a bottom had been found on July 31st was when the bottom would have been found. The signal came August 6th. But the scoop is it was weak. And I'm waiting till today to actually clock it in. Let me show you what I mean by weak. If I come over here and I pull up for you the actual analog version of the confirmation, you can see right here on my chart that until just today, it was just kind of loitering around that other line, that center line. So I wanted to see some pullback. Again, who knows what's going to happen for the rest of today, but it could be that we clock in that pullback. Now, that pullback is what gets me a little bit worried, Sip. Let me go ahead and change my drawing a little bit to my rainbow, the rainbow graph. And once again, let me shrink this out of the way here, this analog version. I'll make it as small as I can. Once again, we pulled back but didn't quite make it into the magenta zone. We've done that 3 times in a row now, where when we pull back, we don't quite make it into this halfway zone. And that just spells weakening and weakening and weakening rally. So even though the rally's moving forward during these summer doldrums, it just seems like this rally is got no, it could be toppled by the littlest little push.
Yeah, and I feel like that's even more so the case when you dig into, well, AJ, let me ask you, what's driving the market up? What is the catalyst for it to go up? And from my take is it's these major names that have a significant weight on the index, and I guess chips, right? If there's good news in the chip market, Nvidia will increase the entire market. Are you seeing a separation from the overall optimism and then just a few names that just continue to keep this market up?
Yeah. In fact, a third party. So remember the report last week was a government report for employment numbers that got everybody up in arms, right? In fact, it caused the leader of that government department to lose her job, right?
Isn't that kind
So
of, have you ever seen that? Have you ever seen that? Isn't that rare?
yeah, it is. It's very much a numbers game. It's a statistician game. It's about giving out surveys. I think they give out 100,000 surveys to corporations, and then it's about the corporations returning those surveys in a timely manner. And usually the corporations miss their deadline, so those numbers get revised. It's really not more than just a job, but what I worry about, and this is on a tangent, but I worry about is telling people that those numbers are rigged so that people lose confidence in what the statistics say, because then we're flying blind if people lose confidence. It would have been better to say, hey, there's some issues in the organization and how they collect the surveys, or need to have better deadlines or more teeth in that. In fact, I have to I delved into that a little bit, and there was actually a group, a government organization that was looking at the Bureau of Labor Statistics and was totally, coming up with ways to revise their process, make it more robust, make it more timely. And that group was let go in February as part of the Doge cuts. And so, it's like we don't really want to fix the problem. We just want to point it out or something. And I've always found that if you don't offer solutions, if all you do is point out things that are wrong, but you don't talk about how to best fix them, that's not very helpful. Anyway, suffice it to say, a third party group, the Institute of Supply Management, not related to the government at all, reported on services this week. And, the US is a services economy. And boy, did we miss numbers there too. So there was a little bit of fear. You can see the pullback on some of these days. We have an up day and then we pull back, and then we have an up day and then we pull back. This one right here was due to that report saying, hey, there might be something to be said with these employment numbers, because we're seeing that the services industry in the US is actually declining instead of growing. And the US really jumps on that. So, yeah, there is weakness overall, but it seems like the markets are still high flying because there's been this consolidation in like just a handful of companies, like the top 15-10% of the companies have like 80% of all the wealth of the market in them. And that's kind of a unusual place to be as well.
Yeah, I saw some stats on that, and whenever they do the timeline comparisons, it was like we haven't seen separation like this since the dot-com bubble, since the Great Depression, since going back to the first depression pullback. So that just kind of, it makes, I guess for what you're doing, it doesn't really affect because you're finding individual names amongst the crowd, but generally to audience members and people who just follow the market, it's part of that FOMO where it's like, oh, we're at new highs, we keep hitting new highs, the market must be doing great. But like when you look under the surface, yeah, Nvidia and Apple and Amazon and Google and Netflix are all doing very, very well. How about the 490 other companies in the S&P? So it's just interesting to continue to see those stats. Let's see.
Yeah.
What else did we have? Okay, so
we had OPEC. OPEC came in and said they were going to increase production on oil. You should start seeing that at the pumps, in the next couple of weeks. We already see the price of oil per barrel dropping a few dollars. That's not a bad thing.
Which is good for inflation, right? Which is that counter to the Fed. And I believe a few Fed members were speaking this week, and the consensus is we're going to get some lower rates, in the next meeting.
In fact, we've got the Fed Watch that we pay attention to. This is the CME group that pays attention. If you take a look over here in September, it's pretty much a given that we're going to get a 1/4 point rate drop. Everybody thinks it. There's no questioning it, especially with the employment numbers that came out. Now in October, which, mid-September is the next one, late October, just about the last day of the month. They're already pushing possibly for another rate cut. The numbers keep changing day to day, but there possibly could be another rate cut in October. And then there's even hints, it's kind of 50-50 right now. There's even hints that there might be a third rate cut in December. So it's going to be between a 1/2 point and 3/4 of a point. So, a 1/4 point rate The question is whether we'll get, just 2 quarter point rate drops or 3. Um, I think it's up in the air, but for sure September, unless something changes in the next couple of weeks, for sure September we're going to get a rate
And this
drop.
is one of these moments where I always get a little bit confused because in theory, when rates are dropped, people will have more money to spend, and it's like considered a stimulus for the economy. But if you continue to drop rates, then the reverse psychology is like, well, things must be bad if we have to continue to lower rates. And so, what are you thinking? Like, when is the market going to start to price in some of these expectations, and or
Well,
is it going to be positive or negative?
yeah, I think if we have it as a measured approach, so long as it's expected, this is what we're looking at when we look at this picture here is expectation by investors, right? This is what we're looking at here. Nobody knows what's in the Fed's head, right? When they go behind closed doors and they have their meetings, besides us getting, the meeting minutes 2 weeks after the Fed. And we also get to look at the raw data that the Fed takes into the meetings. That's all we've got. We don't actually get into the heads of the policymakers. So we use this, and this has actually been quite accurate, although, like with news headlines, it can change drastically. The scoop is so long as what people expect is what is delivered, I don't think we're going to trigger any fear, right? It's if all of a sudden, everybody's expecting a quarter point rate drop in September, and when they open up the doors and give their message, they say, well, we're actually going to drop it a half point. That's when you start triggering fear, like, oh crap, what did we miss? There must be something wrong that the Fed knows about that we don't know about. But so long as the Fed stays measured and does what is pretty much expected, then I don't think you're going to trigger any fear. You're only going to trigger the good news, not the bad news.
Yeah, and I guess we've got more employment and more inflation data that'll be hitting the wire that will kind of navigate what
Sure.
these expectations are, right?
Yeah, and like you said, as an option investor, and I've been talking a lot to other types of investors that are, traders that are more, directional based, and they only have one real strategy, and that strategy is to buy and then sell it, buy low, sell high. The scoop is with all the different option strategies that option traders have at their disposal. Um, we can make profits out of pretty much any pattern that the market throws at us. Instead of a question of, is the market going up? Can we make money on the market going up? Our question is the pattern tradable? 75% of the time, the pattern's tradable with one of our option strategies. So we have way more chance of making money. So I'm not worried personally if the market goes sideways, starts going choppy, reverses down. I've got tools to profit off of all of that. But like you said, the overall economy, I mean, even as investors that can profit on a down market or a sideways market, it never is good when the economy starts to tank.
Yeah, and I mean we generally follow the overall market, but most of the things that you're doing in the community behind the scenes are, specific to, like you said, a setup of some sort with some of your indicators pointing in the right direction. I did want to get your take on I think some of the other positive news that buoyed the market a little bit this week was the replacement of the Fed governor. So one of the governors stepped down. The replacement is considered dovish. That I think that news came out like yesterday, like late yesterday, and it kind of buoyed the market yesterday and into today. That's expected. That makes sense from your end.
Yeah, it does. It's actually because the market is skeptical. I mean, we talk about the voters going to the voting block, but the market, if you think about it, is investors voting with their dollars, right? And so investors are clear, for our current administration, I almost feel like they care what investors with their dollars are focused on. And so the investors have been clear with their dollars, that they don't want to see anything that is rigged in one direction or the other. They want a fair marketplace. And so by putting in a dovish, somebody who's considered quite dovish into the Fed, I think that that's actually a good sign. If it was, somebody who was very much heavily loyal to Trump and the administration, I think that would raise alarm bells, especially with some of the tactics that have been taking place recently with statistics and even the group on the lawyers and on the education front. So I think investors were excited about that, said, okay, good, we're not trying to stack the Fed. Good, let's go move forward.
I see that you pulled up, and I agree with you. It's probably one of the better decisions that he's made. I mean, I'm not familiar with the gentleman Stephen Mirren, but he sounds like he's a knowledgeable dude and not a puppet per se. I see you pulled up.
We like
Yeah,
that.
I see you pulled up some of the economic data, international trade. This is
Yeah.
part of the tariff story.
Well, it's sort of international trade, and by the way, a whole bunch of tariffs just went into effect.
Last night,
I
like
think
midnight, something like
it was a
that.
yeah, I was going to say today. So we'll see about that, especially some of the extra tariffs placed on China and India because they've been buying some Russian oil. So that's an interesting play there. China and India still haven't created a trade deal with the United States. So I don't know if that's going to speed up the trade deal or slow it down. But I wanted to point out these numbers that we're seeing in the international trades in goods and services, these deficits. When I started investing, by the way, and this number was around 20 to maybe 22 billion every month, and now about 25, 27 years later, this number is up at 60 billion. This is how much money we basically flow out of our country in US dollars for buying stuff made abroad. This number really hasn't changed. You would think with all the tariffs and all the rhetoric that this number would have changed at this year at least by a few $billion, but every month reliably, this number is somewhere between 60 and 70 billion dollars. So I just wanted to point that out. I'm waiting for all of a sudden us to be not buying foreign goods and services, but it hasn't quite kicked in yet. Maybe it's a long-term play.
And I guess part of that argument is where is the margin or the differential in the tariffs going? Who's eating that cost? Is it the corporations? Is it the users? Is it affecting their buying habits yet? And I guess it isn't necessarily just yet, at least
No,
significantly enough.
no, not yet. But at some point, I think, haven't we heard that number one, ahead of the tariffs, a lot of the distributors purchase. There's like a backload in warehouses for goods and services. So we haven't actually seen a lot of the tariffs start to trickle through to end user prices. But as those stockpiles dwindle and we start having to factor tariffs in and determining, like you said, are the corporations going to eat it out of their profits, or are they going to pass that on to the end users, or some sort of hybrid solution? Well, there you go. It's going to be interesting to see how this plays out over the next
And
months.
I'll give you just my perspective from being social media user. Just this week alone, I saw a handful of shopping center videos of, like, this one lady was in Walmart and she was like, hey, y'all, look at Walmart changing the signs. It used to be 79 cents per pound. Now it's 79 cents per apple or whatever. And she like did the math and like came up with the inflation difference. And I was like, oh, like, you know, people are starting to do the math in their day-to-day behaviors and making pretty thorough videos like explaining the difference. So the consumer isn't being tricked. Another one is the smaller portions that I'm seeing, like the Starbucks medium cup is now, you know, an ounce less, right?
A few ounces shy.
Um,
What the heck?
so that, you know, that is, I imagine that is taking place and consumers are starting to see it. The other thing that I wanted to get your feedback on, you know, before we go into some, you know, individual names is the VIX, because last week on the show,
Mm.
the VIX was really kind of getting in a good place to pop, and then Monday came around and the market settled back down. And I'm curious, you know, what you're looking at in terms of getting the VIX back in play.
Yeah, my VIX trade is in play. It's going to wind up being a break-even trade. Let's go ahead and visit our Fast MACD. This is one of those indicators you can download from our quick links. I'm going to put it on close instead of VWAP simply because the VIX doesn't have the volume for it to calculate it on. So you can see we got a top. You know, it didn't make sense when I got this top signal to, you know, today might be a follow through. It doesn't make sense for me to unwind that VIX trade, especially if something happens early next week. You know, I've got a August 15th expiration on my VIX trade. So right now, the VIX trade is going to probably break even. But I've got it for another week. If something surprising comes next week and we pop up above $17, it'll be a big winner. Either way, it's hedging my portfolio, and that's the main purpose of the VIX trade.
Yeah, I keep seeing that 15 level being like, you know, kind of like you know, a baseline of, if we break under 15, like, oh, you guys are really optimistic. If we stay above that, you know, a pop is
it's the
kind of
used.
like on the table depending on the mood of the, you know, administration today, and you know, what Putin does or doesn't do and what we tweet about it, et cetera, which is
Yeah, that's a whole nother story, the whole Putin-Trump meeting.
all right. So yeah, we're gonna let's go ahead and get your quick link page up here. Folks, we got a nice little robust audience today. So thank you all for joining us. We're gonna be digging into some ways to make money, to improve your portfolio, to use these options tools to either. AJ, I was at a party yesterday. I'll tell you this. I was at a party yesterday having a conversation with the fella who does covered call writing, and we had a very
Nice.
good 5-minute conversation. It was very enriching because it's like, okay, he gets it. He's like, it's like a dividend. It pays me a check every month. And it was good to see that the, you know, people are starting to come on board. And so if you guys watching want to kind of learn more about how to get into that, how to do that, head on over to this quick links page. We're going to go ahead and throw it in the chat for you. And you know, check out the workshop, the free workshop. But there's a lot of other goodies on here. AJ was showing that indicator with the buy and sell arrows. You can get access to that. You can follow on the socials. You can learn more about Trading Trainer, the program, the organization as a whole, and then you can learn more about coaching. So all of this is in our quick links page. I don't know why I have so much trouble saying that. Quick links.
It's a tongue twister.
It's going to be there. Otherwise, we are broadcasting live. So if you guys out in the world have something that you want AJ to take a look at, drop it in the chat. We'll see if we have time. Otherwise, AJ's got his pick of the week. Maybe did from the trades from the last 2 weeks. Are we all out of those for the most part?
I mean, not Bath and Body Works. Bath and Body Works is kicking butt, Tip. If you take a look over here, we went ahead and bought our underlying symbol when we recommended it. That's our what we call our covering position. Then we went ahead and sold premium, bought protection. Some of us sold near-term premium, so it expired worthless. Others of us sold August 15th premium, so it's still in play. For those of us that had that little week of premium that we went ahead and profited on, we sold it again. And we're getting this signal that we should maybe think about unwinding it. That came at the end of day yesterday. However, today we're not getting follow through on that. So we're ignoring that signal yesterday. We only follow the signal if we get the follow through the next trading day. So, it looks like we're on par to be able to not only capture potentially two premiums, but it looks like our protective option keeps going up in price, up in price. So not only is our protective option offering us protection if something catastrophic happens, but when we do finally get our bottom reversal, we can actually sell that protective option when we roll it out to the next protective option and sell it at a profit from what we paid for it. So this is like the premium selling strategy that we do, the legging in strategy, you know, in a textbook form. So that trade's working as expected. The key trade worked as an earnings trade. So other than that, we're looking for new opportunity. Next week is August 15th. So we're already starting to think about how to sell September premium.
Awesome. And that's kind of the beauty of being part of the program, is getting access to this information a little bit earlier in the week, in the mastermind call, where a lot of the members get together and brainstorm ideas and positions. And AJ gives you
Last week, yesterday's call was phenomenal.
Yeah. We're not going to give you all of those juicy details, but AJ does have one name that he's looking at that we're going to review here in a second. So sit tight, folks. We're going to take a break. We're going to, drink some coffee, wipe our sweat, because it's been a solid 27 minutes of market chatter. And we're going to dig into some specifics. So sit tight, folks. We'll be back in a jiffy. That's that.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, and we're back at it again.
I'm the one, I gotta say, I was listening to you and you said, hey, 27 minutes. And I was like, wait, it's 11:36. And then I realized I was the one who made us late today. I had a visit from a supervisor of the trash company that I don't even buy service from. Those guys are threatening me with pissing off my neighbors because I don't want them destroying my
Hey.
road. But that's a whole nother subject,
East Coast garbage business. You
You
wanna
gotta
mess
be
with those
careful.
guys.
Yeah, no, they totally threatened me, and I'm like, "Wait a second, I'm number 1, not your customer, and number 2, I was the one who's the complaining." But no, he's like, "Hey, man, I'm gonna piss off all your neighbors," and I'm like, "Ah, shit."
Yeah, I don't have those problems here in Los Angeles. It's usually, hey, somebody stole the trash cans again, or where the trash cans are. Like, dude, you
Yeah.
can't sleep in the trash cans, like. All
Oh
right.
my god.
So we'll breeze through. We'll breeze through some of these technicals and try and find some opportunities. Let's dig into your pick of the week for the week. Energy. We did talk a little bit about energy,
Yeah.
commodities. The name that you're liking this week is Devon Energy, ticker symbol DVN, which is a popular name that doesn't get as much of the headlines, I feel like. What do you like?
I like that it doesn't get much of the headlines. So all of the energies, there's something going on, and I think there's a couple of things going on. But when you delve in, they all seem to be in a little bit of a consolidation pattern. What that means is that I'm showing it here with parallel support and parallel resistance, but as of the last couple of months, I've been noticing that some of the companies are consolidating, and Devon Energy, to a lesser degree, is doing that. So I want to just preface my pick this week with we need to watch the whole energy sector and pay attention to why there's this consolidation. But in the meantime, I'm getting, I should say, I'm an end of day trader, which means I really, unless I'm on my podcast, I really don't look at the markets during the day. I look at the markets after the markets have closed. If there's any sort of signals I get after the markets close, I'll look to trade that symbol the next day if there's follow through. We're starting to get a signal today to do some buying of Devon Energy. So I want to pay attention to that this evening. And if it stays in place, I might think about buying some on Monday or Tuesday if I get that follow through signal. We're basically at the bottom of my channel, which means we could buy Devon Energy at its lowest price, over the last, say, 2 or 3 months. And that would be a good time to buy Devon Energy. And you can either buy Devon Energy, the stock, and you buy it in lots of 100 because option transactions are done in units of contracts, which are 100 option shares. So everything has to be in increments of 100. So I could either buy Devon Energy, the stock, or I used my options lookup tool, which is another one of those freebies that people can get SIP if they go through those quick links. Let's pull it up really quick. So if I come over here to the hamburger menu, the quick start hamburger menu, go to the options lookup, and then pull up Devon Energy, I saw that there is a March 2026 option that might be a fantastic substitute. I'm thinking this $22.50 strike price. So rather than buying Devon Energy, let me use a different color with my magic marker. That's a little bit hard to see. Here it is. The Devon March 2026 2250 call, currently going for about $10.55. So instead of buying Devon Energy is currently trading what, at about $32. You can get a substitute option for about a third of the price, and it's going to act. It's basically trading at parity. It's a little bit off, but that's okay. So it's going to move, in the same increments as the stock, but it's just going to be at a cheaper price. So now is the time, if I get that follow through on Monday or Tuesday, to think about Devon Energy as a buy. Buy the stock, buy the substitute option. And then as it tops out, and I'm hoping it tops out a little higher than it did a couple weeks ago. I'd rather it top out where it did 4 or 6 weeks ago. But when it tops out, that's when you sell premium buy protection and start that process of turning this into a money maker.
Yeah, and not a lot of fluctuation on that. I mean, very rarely do you show such tight ranges. And I think when you did your podcast with Fausto recently, it was like that was kind of the revelation, was like, wow, there's some names out here that really don't move out of these ranges, and that's where you kind of hop in with some of these strategies.
Yeah, you can't trade it any other way, but if you trade it this way, it becomes some of the most easiest money that you can get through trading, right? It becomes reliable, consistent, and maybe takes 1 or 2 adjustments a month, right? So you can just keep that kind of flow of incremental. I call it an instant dividend. It's not a dividend per se, even though this particular stock does offer dividends to its stockholders, but it's it's a way to get the options to pay. Like you said, your friend at the party who knew about covered calls, he gets it.
And the only rare thing is he was doing it in crypto and Bitcoin and like trying to explain it
Ah,
to me. And I'm
nice.
like, man, this is kind of, we've never really gone down that road, but you know
Nice.
your stuff. So that was refreshing. All right, so that's AJ's pick of the week. Devon, ticker symbol DVN. We've got 3 other names from our
Okay.
lovely users across the country, across the world. This week, just the country. Let's start with Ted in, I've never heard of this place, Las Cruces, New Mexico. Interested in
Mhm.
fast food chain El Polo Loco, ticker symbol Loco, LOCO. I think Wendy's just had earnings this week, which may have had an effect on this industry. What are you seeing in the Loco?
Well, if you remember from 100 or so episodes, 150 episodes ago, Wendy's used to be one of my favorite for selling premium on. Lately, Wendy's has not been doing very well. I stopped selling premium on it, waiting for it to find a bottom. It hasn't yet. But let's talk about this guy right here. First of all, I like his price point. I like that earnings have come and gone, and there wasn't too much price difference there. Uh, let's see. It, I'm seeing support resistance around $10.25. I haven't yet gotten a signal that a bottom has been found. So if I can find that bottom somewhere between, let's give it as low as $10, as high as $10.50. If we get that bottom signal and it actually bottoms and starts heading up, I would actually say to you, Ted, um, it's time to buy. It's time to buy a little bit of this stock. Buy it in lots of 100, or if we go over, let's see if there's any sort of substitute option we might be interested in. We'll probably look at the March. Trading every dollar. You notice that the strike prices are every dollar. That helps us a lot. You know what? I'm not a fan of any of these substitute options. Let me look at December. I'm not actually, you know what? As I'm looking at this stock, I'm noticing there's not that much activity in the option chain. Take a look over here. I'm looking at the call side of things. Well, yeah, you notice that the bid price is 0 and the ask price is $2.60. And over here, you've got a number called the open interest. This is the number of reported contracts in circulation. It's kind of on the lower side. What that tells me is that the market makers aren't in there providing the liquidity. They just don't see that this is worth, there's not enough traders. So, you know what? I'm rarely gonna say this to you, but I almost feel like we move on to a symbol that's a little bit more active than this particular stock symbol. You can have the best pattern, but if you don't have people trading the options, it's a little bit difficult for us. Now, if you want to stick with just the basic covered call writing, where you let the uh, call go all the way to expiration, more power to you. But if you want to get into some of these strategies where we sell the call and buy it back, or, buy a protective put and then sell it later, that's going to be difficult because it just doesn't look like there's a robust market for
And
options.
sometimes that's the case. So maybe these two next names, it might be a better opportunity, a better setup. But we do appreciate
Mhm.
you, Ted, for checking in on that. Moving on to our second name, heading to the center of the country, Lisa out of Ann Arbor, Michigan, wants to know
Mm.
your take, AJ, on Sentinel.
Sentinel One,
Oh,
I think.
Sentinel One, ticker symbol S.
You put the wrong emphasis on the wrong
Well, it's
syllable,
because
maybe.
it's I
Uh,
feel like there should be a hyphen, Sentinel One. You don't usually put the one
yeah.
into unless, yeah. All right.
Yeah, yeah. I see it. Central loan. Yeah. Okay. Hey, I see what you're seeing. When I don't we should see when their earnings is scheduled, because they had an earnings back in May 28th, June, July, August 28th. You'll want to pay attention to that, because it looks like when there's an earnings announcement, Sentinel One has some movement. But I see that you're probably seeing that 16 is a level of support. Uh, that doesn't mean here's the importance I want to tell you, Lisa. We need to see a lagging indicator tell us that a bottom was found. Just because we're trading down at the lows at 16, that's called a leading indicator. We don't want to make any trading decisions on leading indicators. We just want to perk up our ears when a leading indicator kicks in, and then we want to wait for a lagging indicator. So indeed, if we get a lagging indicator that says we're done going down and we're around this $16 mark that was tested before, um, I would say this is a good opportunity to buy some of this stock. Again, buy it in lots of 100. It's at a great price. And I'm going to do the same thing that I did with El Pollo Loco is I'm going to put in Sentinel-1 into my options lookup tool and kind of evaluate the options chain, especially looking for substitute options maybe out in March or so. Again, I do like that the strike prices are every dollar. That makes it easy for us for option traders. But now let's make sure that there's trading. Oh, yeah. So check this out. Notice that the bid and the ask, different than that El Pollo Loco where it was like $0 for the bid and $1.50 for the ask. The difference between these two is 20 cents, right? 320, 340, 280, 290. This one is 10 cents. Over here on the put side, 210, 225, that's 15 cents. 265, 275, that's 10 cents. What that means is when the bid and the ask price are much closer, it means that there's actually people trading it back and forth, that there's actual market makers in there providing liquidity, and that's what we want to see. We want to see an active option chain, and this is an option that isn't going to expire until March of next year. So to see that much activity in an option that's not going to expire for a while, it gives us good feelings. So yeah, what option would I use as a substitute? I don't even see it. Let me see if I can bring more options into the picture here. Instead of 10, let's go for all of them. I could recommend to you. I actually like this one. It's the $8 call. It's going for about $9.10 as of close yesterday. That's just about, just a little bit over half the price. So you could use this call. Again, it's the $8 call. You might even be able to, I'd rather you go with the $8 call. I was going to say you might be able to go with the $10 call. I mean, you could do whatever you want, actually, but the $8 call is a little bit more of a secure bet if you're trying to analyze risk and things like that. So either way, I think that's great. Again, I'm going to urge you to wait for a bottom signal. I'm also going to urge you to pay attention to when earnings is coming, because earnings has a way of moving this stock.
Yeah, and for the record, they are an American cybersecurity company out of Mountain View, California. Interesting that they have the S ticker. Wasn't that Sprint for a long time? Or yeah, right?
Oh yeah, maybe.
Yeah.
Maybe.
Back in the 90s and whatnot. All right, thanks for that, Lisa. Moving on to our third and final name. Jerry out of Atlanta, Georgia wants to know the take on popular female retail store Victoria's Secret, ticker symbol VSCO. It's going to be time to start buying lingerie heading into the holiday season.
And not only that, I think we featured this, whether it was a user that sent this in or whether it was me that wanted to feature it, because I remember telling folks to go ahead and, buy Victoria when it was down at 18. It's now up at 21. And I think that this is going to be our opportunity to sell premium and buy protection. So, Jerry, if you were one of the buyers when we were telling to buy it low, now is when we turn it into an income generator. So let's look at what stocks we would sell and buy for, we would sell premium and buy protection. So again, I'm going to refer back to my options lookup tool, and I'm going to go to Victoria's Secret, VSCO. And of course I have big fingers, so I typed it in wrong. I hit 2 keys instead of 1. There it is. So August 15th literally is next week. That might not give us much, 85 cents. If you want to sell the 85-cent call and then next week have it expire worthless, well, then that's just 85 cents for the week. That's not bad. The other thing you can do if you want to, not have to be as active, is we can look at the September option. That gives you about, 5 weeks until expiration. And again, we always err to the side of out of the money. That's $2.30. So, you do 85 cents if you want. And then once that expires next week, you come and you do the September. You'll probably make a little bit more, but you're going to have to be a little bit more active. You're going to have to do a couple of trades over the next weeks, or you just do $2.30 and you're good for the next 5 weeks. So that's going to be the premium that you sell. And then as far as the protection, January is a good one. And I saw that the bottom was around $18. So you come over here and there's a 1750. You go ahead and you buy this protective option. It's $1.85. And then, like I said, if the stock does what it's supposed to do, this goes up in price. So this provides you protection, catastrophic protection, but at the same time, a month from now, when you don't need it anymore and you're ready to roll out to the next protective option, you'll probably get more than the $1.85 you spent. So that's the kind of the beauty of my legging in strategy, is that not only do we make money on selling premium, not only do we cover ourselves against catastrophic price action moves, but we also wind up getting another source of income in the rolling out of our protective option. So it's kind of a win-win-win when you leg into premium selling. That's why people like my unique way of doing covered calls.
And that's why people need to head on over to that quick links page and get access to the webinar where you kind of break down those strategies. So thanks for that,
Yeah.
Jerry. We truly do appreciate it. All right.
We like Victoria's Secrets.
Yeah, we've talked about this one a handful of times in the past. All right, so Friday looks like the market's kind of heading back up to highs here, heading into the weekend. What are we looking for? What is our mindset heading into next week? I know you mentioned options expiration a few times there. It is still summer. It is still August. What are your thoughts? How do you want to leave, the viewers heading into the weekend?
I want you guys to start looking at your September option series as your premium trades. I want you guys to be looking for more and more sideways channeling. And definitely, even though this current run of the VIX trade may just wind up being a break-even trade for us, give us just that little added bit of profit, I do want to make sure you continue and you stick with, once that VIX trade is expired, you add the next one when you get the signal. Just keep adding that whenever you get the signal. The reason why is, if something surprising happens, that trade is going to more than cover any sort of losses in your other trades. And that's what we want with a portfolio hedge, because I can't help it, Sip. I look at each time we get a range contraction move in the S&P, and I see that it falls short of our target magenta zone every single time. And that just tells me that every time we move up from there, it gets weaker and weaker. And one of these days, our VIX trade is going to be, the bailout for the rest of our portfolio as we all shift to doing trend reversal trades.
And it's like we only need one piece of data, like we saw on Friday, and some follow through to that data of some
Mhm.
sort of action, because
Yep.
we didn't really get that on Friday. It was just
No.
bad data, sellers all day,
And
decent
then a whole
weekend.
bunch of recovery, right?
Exactly.
A whole bunch of like lip service, a whole bunch of like, hey, no, it's okay, nothing. It ring. We were as at Trading Trainer, we were actually giving a live seminar back in September of 2008, when a week earlier Citigroup was like, oh yeah, that bad economic data we just got, just ignore it, we're all fine, we're all fine. And then a week later, the whole bottom drops out of the market, as S&P starts losing its credibility. All these things happen. So I always worry when you get bad news and then somebody says, no, it really wasn't bad, and then it starts to unravel. So I'm always, I see people say you're so pessimistic. No, I'm just prepared for if the market bottom drops.
Yeah, and that employment data wasn't light. I mean, that's like there's some facts behind that that may continue to unravel in more data. But
Mhm.
I guess short term, we're not looking at that as precisely, I guess, or we're not reacting to it as maybe you're
You need to
seeing.
You'll need to see it more and more as we keep going out. And if this new Bureau of Labor Statistics person that gets assigned comes up with the same sort of data in the next couple of months, well, then that could be a problem.
Yeah, and the crazy part is the surveys. Like, and when you explain that it's based on surveys, and we know how choppy that data could be.
Well, and
Um,
that's why people are always like, why is there such big revisions? Well, what happens is the Bureau of Labor Statistic sends out their surveys to both homes. That's where they get the unemployment number. They ask, are you employed right now or aren't you employed? And people return their surveys. But how fast do you return their surveys? I get surveys and I never meet the deadline, but I do return them. So what happens is you know, people return their surveys later and the numbers get revised. And, it usually takes 3 months to get all the surveys for a given month back. So sometimes it all depends on how the process is done. And there's been so many alarm bells about the Bureau of Labor Statistics process. It's never been focused on an individual, but it's always been on their process. But the way to fix the process would cost Congress and cost taxpayers a lot of money. And what we saw in the beginning of this year is the Bureau of Labor Statistics was actually asked to do its job on a smaller budget. So when you can't really go out and you don't have the resources to enforce your surveys, all you can do is send out surveys and then count the results when they come back. So I don't want anybody to lose credibility. As much as the airwaves are filled with like government organizations are rigged, I don't think it's good for anybody for us to lose our belief in, especially statisticians who all they do is count beans, right? So that's my takeaway is I still believe in math.
it kind of makes that ADP report like more
More valuable.
exactly, because they have the intricacies that are actually connected to the data, and it's not just submit your answers whenever you
Yes.
feel like it.
Yeah.
Great. All right. Well, I think that'll do it for us today. We got a solid names out there, some opportunities. The market's feeling good heading into the weekend. We've got some you and the crew have some names that you got on the watch list. If anybody watching wants to get in on that, head on over to that quick links page and get access. AJ, I think that's all we got for the folks today. Appreciate everybody tuning in. Please show some love. Hit that like, hit that follow, hit that subscribe button. And AJ, thank you for your time today. We appreciate it, guys. We'll catch everybody next week.
On the flip side, bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.